And essentially, this is how it feels like right now. The world is on fire. Maybe I'm just drinking my coffee here. And here you can see that I have my little mug. Welcome back to the second part of the coronavirus series on the stock market impact. The stock market plunge in 2020, and it's just getting worse. So before we dive into this video, I just want to celebrate another success in investing Accelerator, where Florence made 87% in profits from PGR in 3 months. So she realized her 87% profit, and that is pretty amazing. Congratulations, Florence. So this is really a 5-part coronavirus series where I first go through, what is the cause of the virus, where it started, and how consumers reacted to the virus. And that is really part 1 and part 2, Wuhan and the frenzy. So if you didn't watch that yet, you can go back and watch it now. And this is really the second part of the video where I talk about layoffs and the sell-off. So let's dive right in. Part 3, layoffs. So when you're talking about, layoffs, the first region that really got impacted is also China and Hong Kong. And in this case, I actually took a screenshot of this article. Coronavirus sees 50,000 construction workers laid off in Hong Kong. Now, when you think about the economy, right? The economy is driven by people spending money. Now, this is really a consumer-based economy, such as US, Canada, Europe, Hong Kong, Japan, Korea, and so on. And people can only spend money if they're working. So if they're not working, that is going to impact the economy, slow it down, and perhaps even cause bigger problems in the future. And Hong Kong is one of the first regions to get coronavirus other than China. So then you can see that right now, there's obviously a significant economic impact to Hong Kong, and a lot of people are getting fired, not getting jobs. So then this will lead you to think, how are they going to pay for their credit card payments? How are they going to pay for their daily lives? Do they have enough buffer so that they can survive through this turmoil time? And you got to think, well, out of 100 people, probably a lot of people have some sort of buffer in terms of money, but some people are not going to have that buffer, and they're not going to have the emergency fund. So when you think about that, then what are those people going to do when they have a mortgage, when they have credit card loan and other loans as well, and they're not able to find a job? So as an investor, that's what you want to think about. So the next region is really Philippines and Malaga, and here you can see that Fujitsu plant in Malaga working to avoid temporary layoffs as a result of coronavirus. So there's no layoff from here, but then you can see that people or companies are really struggling to make sure that they don't cut employees, or some companies such as Philippine Airlines already blames coronavirus to cut 300 jobs. And these are not the only companies, because there are more companies around the world that are cutting jobs in the last 12 months. So when you think about the unemployment rate going forward, that is going to be higher. Now, one of the most impacted industries is actually traveling. Initially, it was a very joyous time in Chinese New Year. A lot of Chinese people were traveling. And right now, nobody is traveling. So you can see that airline is laying off 1,000 workers as coronavirus takes toll on travel. And that's not just this airline, Philippines Airline as well. And Expedia, the travel agency, the website, is also laying off 3,000 employees as coronavirus hits travel industry. The company that helps sell hotels, the airlines, are all cutting people. What is going to happen to those people that don't have a job anymore? They have loans to pay, and they're not able to pay it, and they don't have an emergency fund. So as an investor, you got to think about the cycle that is happening and how that's going to impact other people who are in the economy. Now, the coronavirus is really happening at a bad time, because when you think about it, what was previously happening was the trade war between US and China, and that slowed down China's economies considerably, and that also motivated a lot of companies to move their supply chain outside of China. So that's going to hurt China's economy even more. Then, when you look at Trump, he also raised taxes on a lot of other countries around the world, such as the European countries and Canada as well. Now, when you look at Hong Kong, which is one of the major economic powerhouses in Asia, it has been boggled down by the protests for months now. It's one of the longest protests in history, and basically that stopped a lot of people in Hong Kong to go out and consume, to buy stuff. So basically the consumer spending for the last 12 months or more has been decreasing in Hong Kong. So that definitely has a negative impact, especially to a lot of industries like restaurants, retail, travel, and anything that relies heavily on consumer is significantly impacted by the protests as well. So when you add up all these negative events together, it's only normal that the stock market is being impacted and that it is going down. So with all those reasons in mind, we're going to head to part 4, which is the sell-off. And essentially, this is how it feels like right now. The world is on fire. Maybe I'm just drinking my coffee here. And here you can see that I have my little mug. This is fine. And that's really what's happening in the world. And if you look at Dow, it fell 4,000 points, which is 12% as we are speaking in February. So it is definitely one of the largest drop. And you can see here, there's a news article saying that Dow fall 1,191 points, which is the most in history. So there's definitely some sort of panic. And if you go back to video number 1, I talk about the consumer frenzy that is feeding into the drop in the stock markets. So afterwards, if you look at very specific industries that rely heavily on consumers, so for example, the airline industry, you can see that airline stocks tumble as the coronavirus spread outside of China. So I think that is really the tipping point when people realize that, oh my God, the coronavirus is real, it's not just contained in China, they're not able to contain it, and now it's coming to get us. So you can see that, as a general person in North America or European city, that's what they would be thinking. And if you look at very specific stocks like United Airlines, here is a daily chart, and you can see that the stock just dropped and fell through the roof. If you look at a manufacturing company in Taiwan such as Foxconn, you can see that the stock gapped down and it is dropping as well. If you look at a banking stock like HSBC, they have been announcing layoffs. Thousands and thousands of people are being laid off in HSBC for the next 3 years. And you can see that the stock price is just tanking and tanking and tanking. And then here you can see that P&G, and in the recent 2 weeks, because the virus has gone viral per se, you can see the stock price took a huge dip from $125 to $110. So the virus definitely has a lot of impact on the stock market, and you can see that across a lot of industries. Right now, the stocks are basically heading into a recession of some sort and is dropping really quickly. So, is there any rational reasoning that you can start looking at the markets? If you are an investor, what should you do? Should you panic? Should you just sell all your stocks right now? Should you hold on to them? What should you do? And I think that is really important to look at the business cycle. So here you'll see a screenshot of the business cycle. There's mainly 4 phases. Expansion, basically all the companies are happy and growing, everyone is employed. The peak, which is stagnant economic growth, that's when the companies hit a plateau. Then economic decline, contraction, and this is kind of where we're at right now. And when you think about it, this is what's happening to us right now. You can see the stock market is actually following this pattern because we had years of strong economic growth, and right now there's no business for retail, no business for airlines, no business for travel websites, and so on. But eventually, we're going to see the dip. And that's what's really important. And that's why I don't think you need to panic. I think that as an investor, you need to learn how to look at the market right now. And that's really where part 5 comes in, hope. And I'm a pretty optimistic guy, and I think there is definitely hope in the market. And you as a smart investor can take advantage of this turbulence time. And if you watch the next video, you're going to get a few tips on how you as an investor can take advantage of the market and find the best stocks to invest in and when to invest in them. So my name is Seto, and my mission is really to help people without financial background to target 30% in the markets using an hour a week through a coaching program called Investing Accelerator. So if you want to learn more, you can click on the first link below called 5minuteinvesting.com/free case study, and you can go attend the webinar. I have packed a lot of value in the webinar, and some of the successful case study from Investing Accelerator includes Dexter making 115% from Activision in 9 months, Irwin made 89% from ANET, and John made 57% from Alta. So once you watch the webinar, and if you want to join the program, you can schedule a call with me, and we'll spend 45 minutes to see if you are a good fit for the program and map out exactly what you need to do in order to succeed in investing. I'll see you in the next video. So thank you for watching, and I hope you enjoyed the video. Please help support me by subscribe, and you can watch the next recommended video here as well. So I'll see you in the next one.